And something is already happening in the silver market, before Monday even begins, not after the opening bell, not when Wall Street reacts, but right now, this weekend, while most investors are still waiting. Because the truth is, the market does not wait for everyone. It moves first and explains later. And if you're not paying attention at this exact moment, you may only understand what's happening after the move is already over. That's the risk. That's the setup. And that's exactly why this Monday could surprise everyone. Because over the last 48 to 72 hours, something has shifted across the global financial system. Energy markets are unstable. Inflation pressure is rising again. Central banks are constrained. And commodities, especially silver, are reacting in ways that don't fully make sense on the surface. That combination matters. Because historically, when multiple macro forces collide at the same time, markets don't move slowly, they snap. And right now, the biggest driver behind all of this is energy. The situation around the Strait of Hormuz, one of the most critical oil routes in the world, remains unstable. Nearly 20% of global oil supply flows through that region, and disruptions there are already being described as one of the largest energy supply shocks in modern history. And this is not just theory. This is already impacting the real economy. U.S. gas prices are still elevated and may stay above $3 for an extended period. Oil surged above $100 per barrel during peak tension. The IMF has already warned that the conflict is slowing global growth and increasing inflation risks. This is not just a geopolitical event. This is an economic shift. Because when energy supply is disrupted, costs don't stay contained. They spread into transportation, into manufacturing, into food, into everyday life. That's inflation, real inflation. And historically, inflation has been one of the strongest long-term drivers for silver. But here's where things become confusing. Because despite rising geopolitical tension, despite oil volatility, despite inflation risk returning, silver has not behaved the way most investors expected. Instead of breaking higher immediately, it has been volatile, pulling back, hesitating. And that contradiction is where the real story begins. Because when a market does not react the way it historically should, it usually means one thing. There are multiple forces at work, and they are pulling in opposite directions. Now pay close attention, because this is where most people lose the plot. Right now, silver is being influenced by two completely different systems at the same time. The first is short-term macro pressure, and this is where institutions like the Federal Reserve come into play, because the Fed is currently stuck in a difficult position. On one side, rising oil prices are increasing inflation risks. On the other, economic growth is slowing, and because of that, the Fed cannot move aggressively in either direction. They cannot cut rates quickly, because inflation could accelerate again, and they cannot raise rates significantly, because it risks damaging the economy. That creates what economists call a liquidity constraint. And liquidity is everything. When liquidity is strong, money flows into risk assets. When liquidity tightens, money moves into safety. Right now, we are seeing signs of tightening. U.S. bond yields remain elevated. The dollar is holding strength. Rate cut. Expectations are being pushed further out. And that combination creates pressure on silver in the short term. Because silver is a non-yielding asset. So when interest rates stay higher, when the dollar strengthens, capital often shifts away from silver temporarily. That's not manipulation. That's macrostructure. That's how markets function. Now add volatility to this system, because oil didn't just rise, it moved violently. Prices surged above $100 and then dropped sharply as temporary reopening signals appeared. That kind of movement is instability. And when volatility increases, markets become unpredictable, which brings us to the second force, because beneath all of this short-term pressure, there is a completely different story unfolding, a structural story. The global silver market is entering its sixth consecutive year of supply deficit. And this is confirmed data. Inventories have been declining since 2021. Supply growth is limited. Physical demand, especially coins and bars, is rising. In fact, the deficit is expected to widen again in 2026, even as industrial demand slows slightly due to global economic pressure. Now think about that. Supply is tightening, demand is shifting, and yet the price is not reacting immediately. That's not normal, because historically, when supply deficits persist, markets do not stay stable, they adjust. But that adjustment does not happen gradually, it happens suddenly, because markets can ignore fundamentals for a while, but not forever. And that is where the tension builds. Right now, silver is being pulled in two directions. Short term, strong dollar, high rates, liquidity pressure. Long term, supply deficit, inflation risk, physical demand growth. And when those forces collide, the result is not smooth, it's volatile. So pay attention, don't ignore this. Because what looks like hesitation right now may actually be positioning. What looks like weakness may be short-term pressure masking something bigger. And what looks like confusion may be the early stage of a much larger move. Because markets don't move when everything is clear. They move when sentiment is divided, liquidity shifts, and uncertainty is highest. Exactly like right now. And that brings us back to Monday. Because the market is about to open into a situation where energy supply remains uncertain, inflation risks are rising, central banks are constrained, and silver fundamentals are tightening. That combination does not create calm. It creates reaction, fast reaction, sometimes unexpected. And this is where most investors make their biggest mistake. They wait. They wait for confirmation. They wait for headlines. They wait for clarity. But by the time clarity arrives, the move is already underway. If you're getting value from this breakdown, make sure you like the video and subscribe, because most people will only understand this after it happens. And by then, it's too late. Because this moment is not about prediction. It's about understanding the setup. And right now, the setup is building, slowly on the surface, but aggressively underneath. Because what we are seeing is not just a silver story, it's a macro story. It's about inflation, liquidity, energy, and global stability, all colliding at once. And when that happens, markets don't move logically, they move fast. And they move in ways that surprise people. So before Monday opens, take a second, subscribe, like, and comment what you think happens next, because the next move in silver may already be starting. And the ones who understand it early are the ones who benefit. And the real question is not whether silver will move. The real question is what happens when these forces finally collide. Because when they do, the move will already be in motion. Now here's where things start to get more serious, because what most people see right now is just price. But what actually drives the market is positioning. And positioning changes before price does. Right now, silver is not just reacting to news. It's reacting to how institutions are interpreting that news. And that's a completely different layer. Because over the last few days, the market has gone through a rapid shift in expectations. At the start of the week, oil surged aggressively as tensions escalated. At one point, physical crude prices in Europe approached record levels near $150 per barrel, signaling extreme stress in supply chains. That kind of move does not happen in a stable system. It tells you something very important. The market was pricing in disruption. But then, almost just as quickly, the narrative shifted again. Temporary reopening signals around the Strait of Hormuz triggered a sharp reversal. Oil dropped, stocks surged, and expectations began to change. That's not stability, that's confusion. And markets do not handle confusion well. Because when the narrative keeps changing, institutions don't wait. They adjust fast. And this is where silver gets caught in the middle, because silver is not just one type of asset. It sits at the intersection of multiple systems. It is a commodity, a monetary hedge, an industrial input, a volatility-sensitive asset, which means it reacts to everything. And right now, everything is moving at once. Let's start with something simple: the US dollar. In times of uncertainty, capital often moves into the dollar, not because it's perfect, but because it is liquid. And liquidity matters more than anything during uncertainty. According to market data, recent movements show that when geopolitical tension increases, investors often move into cash and treasuries first. That creates a temporary strengthening of the dollar. And when the dollar strengthens, commodities like silver often face pressure because silver is priced in dollars. So when the dollar rises, silver becomes more expensive for global buyers. That's a mechanical effect. Not speculation, not manipulation, just macro structure. Now let's go deeper, because this is where most retail investors lose track. Liquidity is not constant, it expands and it contracts. And right now we are in a tightening phase. Central banks, especially the Federal Reserve, are still dealing with inflation above target. Even though there are expectations of rate cuts later in 2026, officials have clearly signaled caution, because inflation risks are not gone. They are evolving, especially with energy volatility back in the system. And when liquidity tightens, something important happens. Markets become fragile. Small moves turn into big moves. Normal reactions become exaggerated reactions. That's volatility. And silver is highly sensitive to volatility. We've already seen this earlier in 2026. Silver has experienced double-digit percentage swings in very short periods, reacting to shifts in macro expectations. That tells you something. This is not a stable market. This is a reactive market. Now here's where things get interesting. Because while all of this short-term pressure is playing out, there's something much bigger happening underneath. The global silver market is tightening, and not just slightly, structurally. According to recent research, the market is heading into its 6th consecutive year of supply deficit, with inventory drawdowns continuing across major storage hubs. More than 700 million ounces have already been removed from inventories since 2021. That's not small, that's a major shift. At the same time, investment demand for physical silver, coins, and bars has increased significantly, even as industrial demand slows slightly, which creates an imbalance. Supply is tightening, while demand is shifting. And historically, that does not lead to calm markets. It leads to instability. But here's the key. That instability does not always show up immediately in price, because short-term macro forces can temporarily override long-term fundamentals, and that's exactly what we're seeing right now. So going into Monday, this is the setup. Oil markets are unstable. Inflation risk is back in focus. The Federal Reserve is constrained. The dollar remains strong. Liquidity is tightening. Silver supply is structurally limited. That is not a normal environment. That is a high-pressure environment. And high-pressure environments do not produce predictable outcomes. They produce reactions, fast reactions, sometimes extreme reactions. What if silver is not falling, but reacting to short-term liquidity stress? And what if that stress is exactly what creates the next major move? Because if you look at history, silver rarely moves in a straight line. It moves in phases. First, confusion. Then, volatility. Then, repositioning. And finally, expansion. Right now, we're between phase 1 and 2. And that's the most dangerous part. Because this is where retail investors hesitate, institutions reposition, and volatility increases. Pay attention. Don't ignore this moment, because what happens next may not give you time to react. Now let's talk about Monday specifically, because markets are about to open into a fragile ceasefire situation, oil price uncertainty, mixed signals from central banks, and tightening commodity fundamentals. And when markets open into uncertainty, they don't drift. They move, sometimes sharply, sometimes unexpectedly. And this is where understanding the mechanics matters. Because when markets reopen after a volatile weekend, price does not start from zero. It starts from positioning. Orders are already placed. Expectations are already formed. And reactions happen instantly. That's why Monday matters. Because it's not just another session, it's a reaction point. If you're still watching, this is exactly the kind of information most people miss. So make sure you like the video and subscribe, because these setups don't appear often. But when they do, they matter. Because what we are seeing right now is not just about silver. It's about the US dollar, global energy markets, central bank policy, and liquidity conditions, all interacting at the same time. And when that happens, markets don't move based on one factor. They move based on tension, and tension is building. So before Monday opens, take a moment, subscribe, like, and comment what you think happens next, because the next move in silver may not wait for confirmation. It may already begin before most people are ready. So now the question is not whether silver will move. The question is how the market reacts when short-term pressure meets long-term reality. Because when that happens, the move won't be gradual. It will already be underway. Now, here's the part most people never fully understand. And this is where things start to shift from information into awareness. Because the silver market does not move the way most people expect. Not in real time, not during uncertainty, and definitely not when everyone is watching. It moves in phases, and right now, we're inside one of those phases, the uncomfortable one. Because if you look at what's happening today, nothing seems fully aligned. Oil is volatile, inflation risk is rising, the Federal Reserve is uncertain, and silver is not breaking out. That creates confusion, and confusion is where most investors make mistakes, because when the market becomes unclear, people start reacting emotionally. They hesitate, they second guess, they exit too early, or enter too late. And this is not random behavior. This is how markets behave under pressure, because right now, we're not just dealing with price. We're dealing with volatility and expectation shifts. Since the Iran conflict escalated, global markets have become extremely reactive. Oil surged above $100, then dropped quickly, then surged again in physical markets toward extreme levels. At the same time, the US dollar strengthened unexpectedly, tightening global financial conditions. And that combination matters because when the dollar strengthens and liquidity tightens, even safe haven assets can fall. We've already seen this pattern earlier this year. Silver dropped sharply at times, even during periods of rising geopolitical tension, not because the fundamentals disappeared, but because liquidity temporarily overpowered them. This is critical to understand because the market does not move based only on fundamentals. It moves based on timing and positioning. And right now, positioning is shifting. Historically, silver does not move in a straight upward trend during crises. It follows a pattern. First, uncertainty enters the system, then volatility increases, then liquidity tightens. And during that phase, silver can actually move lower. That's the phase we may be in right now. And that's why this moment feels confusing, because the long-term story and the short-term behavior do not match. Because eventually, something changes. Liquidity conditions adjust, inflation becomes more visible, and sentiment shifts. And when that happens, the same asset that was moving sideways, or even declining, starts moving rapidly, and usually without warning. What if the drop or hesitation is not weakness? What if it's the setup phase? Because if you go back to previous cycles, you'll see something very similar. Silver does not reward early excitement. It rewards patience. Because before every major move, there is a phase, where nothing seems to happen. Or worse, where the market moves in the opposite direction. And that's exactly what creates opportunity, because right now, this pattern is happening inside a very specific environment. Oil markets are unstable, inflation risks are rising again, the Federal Reserve is constrained, and global growth is under pressure. In fact, recent statements from Federal Reserve officials suggest that inflation could remain elevated, especially if energy prices stay volatile. At the same time, some forecasts suggest the Fed may hold rates steady longer than expected, because inflation has not fully cooled. That creates uncertainty, and uncertainty creates hesitation in markets, because when the market hesitates, people assume nothing is happening. But that's not true. Something is always happening. It's just not visible yet. Because while retail investors are waiting, institutions are adjusting, not in a dramatic way, not in a visible way, but gradually, quietly, position by position. Pay attention. Don't ignore this. Because this phase is where the foundation is built, not during the breakout, but before it. Now bring this back to Monday, because markets are opening into a still unresolved geopolitical situation, oil price instability, Federal Reserve uncertainty, and tightening commodity supply. And when markets open into that kind of environment, they don't move smoothly. They react, and sometimes they overreact. This is especially true when volatility is already elevated, because in high volatility environments, small changes in expectations can create large price movements. That's the risk. But it's also the opportunity, because what we are seeing right now is not just a silver market. It's a system under pressure, energy pressure, monetary pressure, liquidity pressure, and geopolitical pressure, all interacting at once. And when systems reach that point, they don't stay balanced, they shift. If you're still watching this, you're already ahead of most people. So make sure you like the video and subscribe, because these setups are rare, and understanding them early is what makes the difference. Because now we are entering the critical phase, the phase where confusion is high, volatility is rising, and positioning is shifting. And this is where the next move starts to build, not when it's obvious, but right now. So before Monday opens, take a moment, subscribe, like, and comment what you think happens next, because this move, if it starts, won't wait for confirmation. So the real question is not whether silver will move. The real question is who is prepared when it does? Because when liquidity shifts and fundamentals catch up, the move will already be happening. Now everything comes down to this. Not last week, not last month, but right now, going into Monday, because what we're seeing is not just another market setup. This is a convergence, energy shock, monetary pressure, liquidity tightening, and a commodity market caught in between. And when those forces align, markets don't stay neutral. They react. And sometimes they react faster than expected. Because right now, we are entering a phase where uncertainty is still unresolved. The situation in the Middle East is not stable. Energy flows are still disrupted. And even institutions like the International Monetary Fund are warning that the conflict is already slowing global growth and increasing inflation risks. At the same time, U.S. consumers are already feeling the impact. Gas prices remain elevated and may stay above $3 for an extended period depending on how the conflict evolves. That's not just noise. That's pressure building inside the system. Because when energy prices stay high, inflation doesn't disappear, it lingers. And when inflation lingers, central banks cannot act freely, which brings us back to the Federal Reserve, because the Fed is now in a situation where cutting rates too early could worsen inflation, keeping rates high could slow the economy. That's not a stable position. That's a balancing act. And markets don't like balance. They look for direction. Because instead of guessing, let's break this down the right way. If the dollar remains strong, If oil stabilizes or pulls back slightly, if the Fed continues signaling caution, silver could remain under pressure in the short term, not collapsing, but volatile, range-bound, uncertain. We've already seen similar behavior recently, where silver hovered around $78 to $80 despite major global tension. That tells you something. The market is waiting. If oil moves sharply again, if geopolitical tension escalates, if the dollar reacts unpredictably, silver could see a sharp move, not necessarily up immediately, but fast. Because in volatile environments, small triggers can create large reactions. This has already been happening. Oil has moved from surge to drop in days. Markets have shifted direction rapidly. That's volatility. And silver reacts strongly to volatility. Now, this is the scenario most people miss, because sometimes the biggest move doesn't happen when news breaks. It happens when positioning changes. When liquidity adjusts, sentiment flips, and expectations shift. That's when silver can move rapidly. Because right now, we are still in the uncertainty phase. And historically, the move comes after uncertainty peaks. If you look at past energy crises, including the 1970s, you'll notice something important. Precious metals did not move in a straight line. They were volatile first, confusing first, uncertain first, and then they moved. That doesn't mean it will repeat exactly, but historically, periods of high inflation, energy disruption, and monetary pressure have supported metals over time. Not instantly, but structurally. So let's bring this back to where we are right now. Silver is currently around $80 after extreme volatility earlier in 2026. The global economy is slowing slightly, with growth forecasts already being revised downward due to the conflict. Energy markets remain unstable, and supply disruptions are still unresolved. That is not a calm environment. That is a pressure environment. And pressure environments eventually lead to movement. If you've stayed this far, you already understand more than most people. So make sure you like this video and subscribe, because these moments don't come often, and missing them can cost you. Because now we are at the decision point, not for the market, for you. Because it's going into Monday, there's no perfect clarity, there's no guaranteed direction, only probabilities, scenarios, and risk. And that's what real markets look like, not certainty, but decisions under uncertainty. Because what we are seeing right now is not just a setup for silver, it's a setup for the entire system. Inflation versus growth, energy versus stability, liquidity versus risk, all colliding. And when systems reach that point, they don't stay quiet, they shift. So before Monday opens, take a moment, subscribe, like, and comment what you think happens next, because the next move in silver may not wait for confirmation. It may already begin before most people are ready. So the real question is not whether silver will move. The real question is, what happens when inflation, liquidity, and supply finally collide? Because when that moment comes, the move won't be obvious, it won't be gradual, and it won't wait. It will already be happening.